Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. I'd like to do a video today because I'd like to take a look at how the USE minis unfolded on last trading day, which was Friday the 16th. I particularly wanted to do this because the last couple of videos that I've posted have shown how the markets have been quite hard and quite difficult, and I just wanted to show how the cyclical nature of trading comes round, and after some hard days we then tend to get some better days. Now, in Friday's webinar we were talking about how we ought to be fairly cautious on Friday and only look at when we actually get absolutely ideal setups. So I want to look at this DP buy here, this automatic setup here on the 3-minute ES. Now, standard traders will notice it's against a red STF, but what I want to look at is the 15-minute chart, and here you can see our 15-minute decision point support. I'll just put that on there again. And this is what we're working with in the webinar, and again these DPs are on the chart in advance. So we had a DP off this low, right mouse click off the low, click decision point. I'll just drag it across so it extends out in the future a bit, and here you can see that initially at around 10 o'clock New York time we were coming in and finding some support on the DP zone. It went up. The support didn't unfold. The markets then started to make new lows around 11 o'clock, but then started to snap back again. So in this area here, we're actually at larger degree DP support, and this is what we tend to like, because I tend to like looking at areas when there's larger degree support. So I'll take that chart over to that right hand side there, perhaps make it just a little bit smaller like that, and I just want to show you. So we have that in view there coming in, and now let's have a look at the 3-minute. Where are we? 3-minute. There it is. 3-minute ES there coming in at this particular point in time. So there we were at around 11 o'clock just after, coming in at 15-minute support. So now if we look at the same time zone here, which is about 11:30, we can see we got a DP buy. Now what I liked about this DP buy, this was also what we call a VSA setup. So if I look at the volume here and I zoom in a bit, you can see that this bar here that I've got the cursor over, 11:27, made a new low below this this low here. We had our VSA set up here. In other words, this volume bar was highlighted by being red, so it showed that it was an increased volume on increased market activity. However, as we teach in the webinars, and is fairly standard for what most professional traders know, is if this volume is selling, then the market will continue lower. However, the next bar we got a blue buy bar, and most importantly that came in at our DP support. This is the key, is there's our support zone on the chart in advance. So we had a high volume bar here going down into our DP support. The next bar stopped going lower, in other words reversed, and gave us a blue buy setup. And I'll just clear that off because this was actually an automatic setup. So if I hover over this bar here, right mouse click to analyze setup, you can see it gives us our full analysis. But the point being is, because we know that this bar here failed to follow through to new lows, that this volume, this high volume we had here at 11:27 was not selling, it was actually buying. And that meant that this DP buy, not only was it a good setup because it was at 15-minute support as well, but because it was a VSA setup, it was backed by institutional or professional buying. That made this setup a very good one to choose. And as you can see, the market rallied strongly straight up into the first profit target, where approximately 4.3 hour profit was available. But as I teach in the webinars, do we really want to just come out of our first, i.e. the closest profit target, if we knew that this is professional buying? Professionals tend to move the market further. In other words, they're not going to be doing all this effort into here just to move the market a small way. They're going to push it further. So what I suggest is, as the market was starting to rally here, we go to the larger degree chart, which in this case was the 15-minute chart. We go back to the pivot, the last pivot high, which is here. We put the decision point on from here, and as you can see, that is exactly where the market rallied to. So it went from 15-minute decision point support right the way up and tagged this 15-minute decision point resistance. So in reality, this is the area you should be using for your target because it's the larger degree resistance area. It's not the initial area on the 3-minute chart, it's the large degree area in and around 1358. As such, what I would suggest on our 3-minute chart, if I go back to the 3-minute chart here, is rather than coming out at this first target here, I'd go back to the 15-minute high, which was actually this point here. If we can see here, it's at just before 2 o'clock on the 15th. There we go. If I go to the 15-minute charts, 13:45 on the 15th. So if I do the decision point target from here, that came up, and as we can see, caught that high as well. So what I'd suggest is for the professional traders among you, rather than looking to come out straight away at your first target, I'd look to run this a bit further and come out nearer your second target. And as you can see, this would have had a buy setup, which was pretty much the low of the day, rallied up into, again, which is pretty much the high of the day. The result would have been a lovely 7.8R profit. In other words, a profit of approximately 7.8 times the initial risk. Remember, we use our correct position sizing to vary the number of lots, contracts and shares to keep our initial risk small under control. And that's why I wanted to do the video today, because it showed you after a couple of days of harder trades and harder days, we come to a very good and obvious setup here for the more experienced traders among you. Again, the key facts are that, or the key points are, because this was at 15-minute support, it was at larger degree support. Again, that was on your chart in advance. We got the automatic setup. It was backed by our VSA setup, and that showed that professional traders were coming in to buy here. So the trade was from this automatic setup, not into our first target, into our larger degree target, because we're expecting a bigger move, because the professional traders were taking part in this move, and the result was a lovely plus 7.R profit. Just as a PS for standard traders, if you'd gone to the 5-minute chart, as the market declined back down here, there was another setup on the 5-minute chart, a perfectly standard setup with a black STF that caught this low up into the rally at the end of the day for a nice plus 3.8R. So overall, it was a very good day for MTPredictor on Friday.